Hello, active traders, and welcome to TradingTheOpen.com. This is Ken Calhoun, your host, president of the original Day Trading University since 1999, training tens of thousands of the world's active day traders. Wanted to welcome you all to today's live session. But first, a note from our regulatory compliance department. As always, all information is for educational use only. We make no advice or recommendations about what to buy, sell, or hold. We do not do anything in a live account. We do things in a safe learning environment. And so by watching this, you agree not to make actual trades, but rather test all this out in a demo or simulated or paper trading account only so you can learn in a safe learning environment. I've been around since the year 2000 with the live room, so celebrating now 17 years. Who else in the entire trading industry has been trusted that long? It's a short list, right? Anyway, great to see all of you here. At Trading the Open, so many thousands of people have been with me in the last 17 or 16 years, no, 17 years now. 4 top professional strategies are not only the stock trading setups for gap and breakouts, but candlesticks with 1-minute candlestick patterns and tape reading. I'm an expert, the original expert in tape reading for time and sales. We used to use level 2 back in the day, but now we use tape reading. And I've been published and used this since the year 2000 for entries for momentum breakouts. We also look for price action trades. That's the main strategy, is minor gaps and big previous day's movers in our current day for momentum trades with morning gaps and breakouts. A quick note here, the best stocks to day trade professionally. Ask any Wall Street, ask any of my institutional clients, usually 20 to 70 bucks a share. We do not like the FANG expensive stocks like Facebook, Apple, Amazon, Netflix, Google, because the leverage is bad and for what you have to pay in the spreads are wide, so it's expensive to do business with that, so those aren't good. On the other end of the scale, the stocks especially under $10 are horrible because they get circuit breaker halts, they're thinly traded, they're easily manipulated by pump and dump con men who run chat rooms saying, buy now, I'm in thousands of shares, oh, I just made a fortune. So avoid the thinly traded cheap stocks, avoid the expensive stocks. I like the sweet spot in the middle. Stocks, usually here at Trading the Open, we cover usually $20, $30, $40 share. Occasionally we'll do the 50, 60, 70, but most of them are $20, $30, $40 a share, as you'll see coming up in just a minute. Volume of at least 15,000 shares a minute is absolutely critical to avoid wide spreads and expensive bad entries and the rest of it. So if you're struggling as a trader and you're taking too much expense in terms of slippage, make sure that you have volume of at least 15,000 shares. That is not negotiable. That is not an option. Ask any professional Wall Street guy or hedge fund trader or prop shop guy. They'll tell you, yeah, 15, 20K a minute or better is what you want as a professional trader. We like gappers and previous days big movers with the minimum 1-point daily range with high volatility and volume. And really what I specialize in teaching you folks here is clean, wide, tight, open breakouts and gaps. The stocks to avoid, and we're going to get to our charts in just a second here, but I got so many of you here who are new, and welcome aboard. We're at a record 661 of you registered for today's session. Welcome to professional day trading. Stocks to avoid at all cost are the ones that are fool's gold. They look cheap, but they end up blowing up your freaking account. So do not trade under $10 low float pop and drop BS phony stocks, or stocks that's low vol, and usually what do you say, high volatility but low volume is a horrible combination. So you do not want things that have less than 15,000 shares a minute volume. You do not want stocks that have less than a 1-point previous day's range. The uncommon will be out there saying, it's a $3 stock, it's right. No, always look at the chart so that you can put it in context and see what the previous day's range is. If it's some cheap $3 stock that only has a 20 or 30 cent trading range, you know that that's a kind of a poker tell of what to avoid. Do not trade cheap, thinly traded, pop and drop under $10 stocks. Avoid phony chat gurus claiming big real money profits. A lot of them have been busted by the regulatory compliance agencies, thankfully, for trying to pass off demo account trades as real money trades when in fact it's a big smoke and mirrors game. So avoid them. Avoid front running, easily manipulated. We call it potato. If you're locked in, you earn. Chasing to scalp for a little under 10 or 20 cent moves on risky thousands of shares, isolated stocks. That's what to avoid. And also the reason for that is that you get circuit breaker halts and wide spreads. Here's a hint, if you're trading stocks that have circuit breaker halts because of volatility and the gap that goes against you and wide spread of over 2 or 3 cents on the inside market, those are horrible trades, so avoid that. Kind of last note of times to avoid by conmen. The BS claims of huge real money profits. It's a bunch of crap. They trade low float, low volume, under $10 stocks. They have impossible good fill after the fact so-called wins when it's just made up. Nobody seriously enough can duplicate it because it's BS is why. Very slick young conmen duping traders. I've seen a infestation of the day trading chat room industry the last 4 or 5 years of these kind of guys. Avoid like the plague. They do minimal education, but they'll constantly try and upsell you into multi-$1,000 so-called courses that are hogwash. And they use SIM accounts that they're trying to help as real. The way to verify that what I say is true is look at time and sales. And if they're verifying, no, I'm in 3,000 shares, go back in time and sales and see, was there a 3,000 share buy? And there wasn't because they're just making it up. And of course, they have proprietary overpriced BS indicators and costly courses. As any good attorney general or compliance agency would tell you, if it sounds too good to be true, it probably is. Main thing that the tell that you're dealing with a con man is they make bogus claims of huge real money profits and they're trading cheap instruments. That's kind of the constellation of crap out there, so avoid that stuff. So on to a positive note, what's best to day trade are things that have high volume and high volatility. I'm not a big fan of E-mini futures unless you're at a 2-day high gap continuation or a 2-day high breakout because they tend to be choppy a lot of the time. So that's not good. Stocks under $10 are bad because if they have low volume and high volatility, they're dangerous. We want stocks with a nice wide, easy to trade range on high volume, priced in a good professional range of 20, 30, 40, 50, up to $70 a share. Okay? Before we look at our charts, which we get to in just a couple of minutes here, I want you to start thinking, this can really help start potentially turn around your trading, is if you start trading a little more strategically. And what I said, you may have seen my Money Show interview where I say trade wide, not deep, or another professional trader says the same exact, or close to the same thing in his company. You want to trade many different positions so you have multiple occurrences of getting it right. It's all about the math and the P&L. So don't overtrade thousands of shares on single instruments, especially cheap stocks. Instead, trade 3, at least I like trading 4, 5, 6, 8 charts a morning on good breakout patterns. Practice your patterns, look for early exits, use a step-by-step process, and also get really good at break-even stops. That's important too. If it runs up a little bit, and we've all been there, right? If it runs up, does it sound familiar? It's gone up 20, 30 cents, it stalls, and it comes right back down again to your entry. Get out of cash. Don't screw around and wait for it to go against you and try and rationalize the trade and stay around too long. Your progress as a trader depends on your ability to follow and trade several positions like any professional trader will tell you, not single isolated hit or miss sniper type trades that you end up losing, but the chat room guru miraculously seems to make money with. It's because it's smoke and mirrors and it's false. The truth is you're going to lose at least half of your trades. How do you still make money? And ask any Wall Street guy, they'll tell you, you got to trade a rack of trades or a set of 3, 4, 5, 6 different positions minimum. Use tight stops, recognize and time winning entries and exits. Expect you're going to get a mix, by the way. It took me years to figure this out, starting back in the late 90s, was to expect a mix of wins, stops, and draws. And it's a numbers game, so you have to make the math work out. Quick checklist. Pick at least of the list that I provide you with each morning. Pick your top 3 favorites. Use time and sales, and I'll tell you about it as a member to confirm entries. Avoid trading inside. Those are charts or days which are inside the previous day's high-low. Inside days, inside charts are usually horrible. Exit. We do have additional ones if they've got a strong volatility, but for the most part, we focus on gap breakout continuations. So I've traded millions of dollars worth in my career as a trader. Exited whole numbers and support resistance levels. Okay. So our chart setup, we've got a few things to look at. A 2-day, and again, I apologize for going quickly, but the market opens in a few minutes and I want to go through the charts with you guys. But your chart should have, say, this go-to webinar on 1. Monitor number 2 should have a 2-day chart and the day's watch list. If you have a third monitor, be sure to put your demo account in. I use and recommend interactive brokers. By the way, be deeply suspicious of any chat room that recommends you illegally use some offshore broker in a different country. That's a tell that you're dealing with a con man. How do you think the IRS feels about that, or the Securities and Exchange Commission, if you're trying to dodge the pattern day trading rule by using an overseas broker? You might not get caught the first year or two, but eventually you will get caught and hung out to dry. Stop the madness. Do not use overseas brokers. That is a bad idea. Use a legitimate in your country of origin broker who is properly licensed in your country. Do not try and dodge the pattern day trading rule. Just do, in a live room, just do paper trades. But even if you're live trading on your own, just follow the law, right? That's 3 trades within 5 days to be in compliance with our country's laws. Do not try and dodge our laws by using an overseas broker to dodge the pattern day trading rule. That is against the law. Do not do that. Okay? And fourth, if you have 4th or 5th or 6th monitors, you got a big baller day trader setup, you can put thumbnail charts in it to keep an eye on the market. So I do have a 2-week trial available for $5, and I dropped the price. I've got plans starting at just $97 a month, and that is the month-to-month rate at just $97. You don't have to have a lot of months of access to get that rate. That's without downloads. If you want downloads, I've got a professional subscription that's double that, that's just under $200. I used to run the room at $495 a month, but I've since dropped the price down to as low as $97 a month. So you can register for that at your convenience as well. Okay, let's go ahead and get started with today's live markets. The first thing you want to do as a trader is always follow market first, right? So what are the futures telling you? The spiders, kind of the tradable version of the S&P, are gapping and continuing today. So that is a strong long bias. And each morning as a member that we meet Tuesday, Wednesday, it's kind of like the espresso, filet mignon. We don't waste time on the shoulder days, usually choppy Mondays or hit and miss Fridays. We like to focus our energy on the kind of like the espresso, strongest days of the week. Anyway, the point is spiders are gapping up. The other indicator that you need to use as a day trader is the NASDAQ 100 pre-market indicator, and that's called the QMI. And the way that you want to set that up is to have it show just until right before the opening bell. Remember, I use around 8:15 to 9:29 or something, so I can see exactly what's going on. We've got a nice wide range in the NASDAQ and a nice gap up in the S&P, so that's good. We've got a strong long bias. One thing that so many thousands of traders have valued over the years, it looks like we're still at 661 registered. Thank you for a huge epic turnout today, guys. We want to make sure that you're looking at charts that have good gaps, number 1, and good breakout strength, number 2. So let's run through our list of charts today. We'll just click through these quickly. RYB, and what you get here as a member is we got the long triggers or resistance areas here, and the short triggers here in red. Longs are in green. We have a perfect box trading range. You do not just do directional trades. You don't just do long plays as a day trader. You have to have both long and short setups with the strongest patterns out there. OSTK is starting to bounce. 44.6 is my long trigger. So do you see this? We would consider going long, paper trading only. These are not for real money trades per compliance regulations. But anyway, 44.6 is our long call here if it runs up over that. We don't sit here like watching paint dry like the slow amateur rooms do. Any professional day trader, we're clicking through our charts strategically step by step. VXX heads to new lows on market strength. It's an inverse ETN. VRX making a little bear cup on its gap. Market's about ready to open here. Apache has a nice previous day's run. And QD also had a nice, for a teen price stock, it had a pretty good range. So here we go. The markets are about to open. Ding, 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 ding. And they're off out of the gate. Let's take a look at our spiders and see what the 1-minute chart pattern tells us on the open. Hey, good morning, everybody. Let's see which way things run in today's markets. The first thing you want to do, thanks Barry for that. Sorry if the audio is a little choppy, we got a huge turnout. We're going to click through the percent gainers to see who is the most green. And if your percentages don't match mine, it's because you probably have it set wrong. You got to compute change from open, not previous close, which is the default. Day traders, we always want to see open range breakout relative strength, and the way to do that is to have it tell you exactly where things are running. SQ, pretty good volatile instrument. We're going to see if it gets long over 38.8. That's just a straight momentum play, almost 20 cents above the inside market, which is 60, well now 57 by 55. We go short if it loses 38.20. So what you do as a day trader is find instruments that have big honking ranges of at least a point or two that set triggers right outside immediate support resistance. Either if you, I won't use the word safe, but a more conservative trigger would be over the whole number over 39. But I'm going to put a momentum shot at it here at 38.8 for a long call, or a short, which is more likely to hit if it loses 38.20. So you have a box range right outside the immediate support and resistance. The long's up here at 38.8 and the short's down at 38.20. And feel free to ask questions. I'm here for you folks, as I have been since the 90s. I want to see who's starting to get an early run. Now, usually Mondays are kind of quiet, so we want to play it safe. So 1780 is starting to hit. One feature that you'll enjoy as a member here once you wisely join, hint, hint, is that I will often put second chance entries. If something starts to run and you missed it, you have a second shot at it, a second long trigger up at 17. First was 1780. Use a break-even stop on that. Next line is 1810 if it keeps running up. And you'll find that I often, as the kind of a default, I will often call break-even exits for you, because that's really important that you understand how that works. Bank of America is starting to do a gap continuation. Let's see if it gets them hit over the whole number. BAC. Look for a long play up over, say, 29. I'd wait till 29.20 and short if it loses 28.60 support. And that's a good, sensible, professional approach, is have both a long for a continuation, avoiding a false breakout. See, a newbie trader might buy if it pokes its head right over 29. And it runs up to the diamond and stalls and drops. You don't want to be that guy or that lady. You want to trade things that actually have some consistency. So gap continuations like this are my single favorite signature chart pattern to trade. You can see the bullish cup pattern. Does everyone see that? It looks like a letter U or letter V. Sometimes you'll see an inverse head and shoulders, but you see a bullish cup that takes on new highs. So now it's alive, and it's on the scanners of institutional traders around the world. We want to see if we can get 30, 50, 80 cents out of it on a continuation. But in case it doesn't go anywhere, hint, you don't just sit there and follow that one stock. Hey, it's running. Let's all be amateurs and watch this one only. And it disappoints and doesn't go anywhere. In the meantime, something else like this goes swang and runs up without you. So you don't want to be that trader. You want to follow up on these things. There's a break-even exit of 14.50 that's currently hit and starting to work out. Next long would be 14.8. That's one thing so many hundreds of traders have told me they value over the years is I like to use multiple entries. So if you're off following one and you miss it, you have another chance at it plus additional entries. Charts that actually make sense. OSTK, the 44.6 is starting to work. Sell half now for a quick 30 center. Trail a stop at break even on the rest. That's an inside chart that's breaking out to new highs. Next long would be up at, say, 45.2. Everybody see it's starting to work out, but I'm very cautious about getting out at the first sign of trouble, or at least doing a scale, position sizing scale out of some of it right now. Cash out a little bit now, sell half now, trail a stop at break even at 44.6 on the remainder. And the way that you follow these so that it's not impossible to follow multiple instruments is set up buy stop orders ahead of the opening bell where possible in your demo account so that you can get these fills in real time without chasing. Okay, so let's go through our list and see who's hot. VRX heads up to new highs. QD starting a breakout, pulling back just a little bit. Bank America, a nice breakout runner. It's getting close to that 29.20 long call, so keep an eye on that. Well, thanks for the heads up on SQ. We'll see if that goes. Yeah, you're right. Thanks, Trace. The 38.20 is in the money a bit. You may want to cover some right now and put a break-even exit on the remainder. Once something runs, like I say right here, once it's moved in our favor by 20 cents, exit half to lock in a gain and use a break-even exit on the remainder. You can always reshort if it keeps going down. A good professional breakout trading approach is always look for multiple entries. Don't just do single entries. Some $3 stock that goes 10 cents trying to bet thousands of shares and losing your shirt. That doesn't work. What you want to do is trade multiple instruments in a more professional manner. And it does take years to learn. It's not something that you pick up overnight. There's not, you too can become instantly financially free and blah, 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 like some of these con men are trying to hustle the market into believing. This is a hard as hell thing to learn, but it's the way professional traders, ask any professional trader, you know, how this works. That's what you're looking for. CSX kind of missed the first breakout, but it may be good for either retracement on the downside. Let's do 57.7 on the short. So what, 90 on the inside, 86 by 90 on the inside. It's at a whole number resistance, so we would not want to go long here. I would wait till 58.3 in case it gets a second wind, and often they will. On a good first breakout, it does its little pullback off a whole number, makes a bull flag, and then continues on up. So 58.30 would be a secondary, or for us would be a primary, but it would be a secondary move in this chart. It's really exciting to try and decipher the puzzle that the market presents each morning because there's so many opportunities, and your goal is to take shots intelligently at 2 or 3 or 4 of them. 1780 starting to work. Sell half now for a quick scalp. Put a stop at scratch at break even on the remainder. Rebuy if it gets over 1810. Okay, it's starting to run up. BAC looking good. We're not in yet because we're expecting if it's going to be a false breakout, it's going to be right now. So we want to hold our breath until it breaks north of 29.20. Always be on the lookout for this particular pattern. It looks like a gap continuation, a bullish cup gap continuation, kind of like the letter J. Right? It's like a J pattern. It looks like a minor bullish cup that then takes out new 2-day highs. Those are especially good for swing trades as well, because those are charts that are likeliest to attract not only order flow from high frequency trading algorithms, but from all the thousands of traders I've trained since 1999. We all look for these minor gap continuations, not big gaps, multiple points that are way up in the sky, but nice little minor tight gaps that continue to take out new highs on breakouts. A place to look at too. I mean, in addition, we've got plenty to cover here for you, but in addition, the other place to look at, you never need a proprietary scanner. Anybody trying to sell you a proprietary scanner is, I won't say a con man, but they are opportunistic and I'm not going to call them complete dishonest shams, but you don't, just say it's unnecessary. You do not need a proprietary scanner. All you need is a brain. All right. Actually, a brain and a leaderboard scan. So use a control, and I use eSignal to answer a question. I use eSignal and have for over 15 years continuously, professionally. And we're looking for percent gainers and losers in the New York Stock Exchange and the NASDAQ. That's all you need. You do not need any fancy overpriced scanner, because all they do is they use a leaderboard scan and they derive their scanning settings from a standard percent gain list. That's all they do. That's kind of the secret sauce. So you do not need a proprietary scanner. If you bought one, you've been ripped off. Sorry to say. You do not need a proprietary scanner. Ask any Wall Street guy. They would laugh at the idea of using a prop scanner. Those guys use percent leaderboard scans like I do. That's all any pro needs, and that's what I teach you guys here exclusively at Trading Open. We got a minor gapper in Macy's. Department store looking like it's doing a holiday rush. Let's do 25.40 on a continuation. If this bull flag continues on up, on a loss of the 25, it's 24.90, we hit it short. Only learn trading from those of us who've been doing this for over 15 years, but also have both long and short triggers identified for you well ahead of the opening bell. And then, of course, updated live in market, but you need to start off with a visual representation of like triggers ahead of time. Beware anybody who makes after the fact, oh, I was in, honest, trust me, I was in from here and now it's ran up. Oh boy, no, that's a bunch of crap. But the truth is, you differentiate professional traders and people who know what they're talking about by the ability to make calls that work out before the price gets there. How many of you would agree with me that it makes sense to have specific entry triggers identified before price gets there? Only good traders can do that, by the way, which is why virtually no one else in the whole industry does that. A few have tried to copy me, but I'm the original, and I'll leave it to you to decide if I'm the best. Take a look at the performance today at the end of the session and see how many winners we had. The point is, we want charts that actually have heat. They are well explained so that you can see what's worth taking a look at, and also where to trade it, paper trade it in a demo account. I've got to say that for compliance reasons, but I think you really should just use a demo account. You have, like I've said for years, and now some other guys starting to copy this too, but you have no business trading a live account until you make money in a demo account. We have a 2-day high gap continuation in US Steel. I used to trade X back in the day. Let's do a straight momentum play at 30.4. We don't want to cover too many. I don't want to overwhelm you guys with too many. I've done as many as 304 real money trades in a single morning in my Interactive Brokers account. That's a day with a lot of coffee. A little joke there. Coffee's a day trader's best friend. Anyway, US Steel is hot. And as you join our community of traders, and again, it's at tradingopen.com/try. Actually, let me just put that in the chat text here for you guys. And follow up with these guys as they're running in real time. What do you notice as being maybe a red flag about this US Steel? Well, we got kind of a shooting star forming, so that's why we've got a 30.4 long trigger. But we got a lot of bearish upper shadows. So I'm always evaluating trade potential for you here in the live room. So we're looking at the pros and the cons of each of the different charts. Anyway, if there's a lot of bearish upper shadows at the top, that means that the buying pressure is getting a little thinner, so you want to be cautious with that. And if you want to join me for the next couple of weeks, you can do so at just $7 for a 2-week trial with the money back guarantee, of course, so you can try it out for yourself. I like this CFG gapper too, so we'll throw that up. Let's do 42.20. That should be more than enough for today. I don't want to cover too many for you guys, but the good thing about the room here is I like to cover within reason a dozen or so of whatever charts are the hottest. Only with our gap charts, percent gain list is all you need as a day trader. See, $5 stocks like this are perfectly horrible because traders would get in, they get stopped out, then they try again, they get stopped out, and then it runs without them. They get frustrated, so they go short and moves down a little bit, and they get stopped out and it runs. These kind of charts have volume and volatility, but they usually don't work out. But I gotta take a shot. I'll still put the triggers just because that happens to be an especially good one. I generally avoid cheap charts like the plague because they tend to, I've lost the most money in my real money trading accounts trading cheap charts. And it's not because I suck as a trader, I'm a good trader, but because they tend to be very treacherous and easily manipulated. They have pretty good volume, so we'll follow PXS. So if I do see an occasional rare chart like this, kind of like a unicorn, where you've got a huge honking triple, this guy ran from 3 to 9, and it's got a wide range. I will pull it up in the room for you, right, as a courtesy, but I like charts in general, as any good trader does, that have bigger ranges and more consistency. We'll see if this guy takes out 1880 on the high side. OSTK really shot up like a sun gun, right? 44.6 is good. 45.20 now also good. Sell half now, trail a stop at break even at the 45.20 on the remainder. In case this is it and it stalls at the midpoint, you want to take some profit early and often. So 45.20 hit, it ran up to the 40. That's, you know, a quick run. Scalp out a half of it now and trail a stop at scratch on the remainder. You know, the exciting thing about trades and setting up your entries and exits is that there's so much to learn about pattern recognition skills and where things are like this to run. That doesn't look like it's going anywhere. It might be a buyout, so we're going to delete that. Market's headed up and starts to pivot back. Note that the stock market will often do a pivot near 10 o'clock. Now, we're still 15 minutes away from that, but give or take a couple of minutes, you'll often see the 10 o'clock shake or the 10 o'clock shuffle. So be prepared for that, and I always prepare traders for that here in the live room too. VRX getting close to, but not quite under the 1750 short. You can see, right, these are good charts. They have good volume and volatility, and those are the type of charts you want to make kind of the bread and butter as a trader, or things that actually will run for quite a length of time for you prior to reversing. That's kind of the trick in day trading, is you have to pick charts that have big ranges that are likely to run for you before they stall and drop. OSTK continues to skyrocket on up to new highs, which is all well and fine. I got you guys in at 45.20 and earlier back at 44.6, so starting to work out, but we're getting close to a whole number. And oftentimes I will say, you know, if you're a new trader, say less than 10 years experience, you know, sell all paper trading long, kind of like right now as it's getting close to a whole number, because you want to lock in a 50-cent profit, right? I got you guys in at 45.20, we're at 70 now, right? Boom! How much money could you have potentially made had you taken my calls? At 44.6, that one ran up a bit for us, and I got you guys out with the 20-cent one on that, and 45.20 on the second one, which is good for 50 cents. Both good green plays in OSTK. Overstock. And you can see these are the kind of charts that make sense to day trade because of the point range and the volume. We're not way high priced FANG stocks, and we're not tier one choppy lead stock like Microsoft or Intel with volume but no volatility. You want things that have both volume and volatility. That's why the cheap stocks are a fatal flaw, because they often don't have the volume to match their volatility, and so they get circuit breaker halts and they get stopped out and they get wide spreads and they're crappy to trade. So do not trade cheap stocks, especially those in low volume. Those are the worst. Those are gutter stocks. Those are gutter stocks or junk stocks on the street, or the under $10 that don't have any range. You have some very slick con men out there trying to present that they can make a fortune trading those. That I would call BS. Ask for their tax returns. You'll see a bunch of crickets chirping. They won't disclose because it's not real. The truth is you need to trade instruments with multiple points of range that are still, you know, under $50 a share where possible, have really good volume, right? Does everyone see the validity of that approach? This is a good day trader stock, right? This guy ran up a point on a $40 stock without any major pullbacks. Everybody, trail a stop at 45, what would I use? 45.6 on this guy. If it gets under 45.6, and that's even a little wide, but this guy is at times up to a couple of pennies spread. So actually, let's tighten that. Let's use 45.7. Go to cash if this guy gets to 45.7. Professional tape reading standpoint, what you're looking for is an imbalance in buy and sell pressure in the sizes column. Or, again, the price is the ace of the deck, size is, the volume is the king, and the size is imbalance is kind of like the queen for the fellow poker players out there. Anyway, we go to cash if this guy loses 45.70. Let me see if I can get you guys out within a dime of the exact top. It's a good rule of thumb. You want to be selling your 80 and 90 cent increment instruments because that's right under a whole number resistance. So if you're in, as I called for you guys at 45.20 or even earlier, 44.60, right? That was the first long right there. This was the second long right there. Our work here is done, grasshopper. And stick a fork in it. If you're a new trader, sell it all now, take the cash, and you're happy. And now see it's starting to drop. Everybody go to cash now. And we take money and run. As soon as I said that, it dropped, as though the Wall Street could hear me, right? Boom. Remember, for those of you professional institutional guys, you're not supposed to be using my calls for making the market or making order flow. This is all for educational use only. But we nailed it, baby, right? And I got you guys out at the exact freaking top, right? And that's how you day trade. Next, is it worth another shot? Nah. Más o menos, maybe a little bit over 46 and a quarter. I'd take a shot again at 46.20 and 60 if it comes back to life, like Frankenstein's monster. Bzzz, it's alive. Let's use 44.8 on the short now if it rolls under that 45 whole number. Does everybody see the validity of the approach? You're looking for good, strong breakouts, selling at the first sign of a slowdown right under a whole number, go into cash, and then you can always reset and trade again if it gets up to new highs. Good traders do a lot of, I won't say hedging, but yes, hedges are good, or legging in and out of your trades so that you're doing a very good position sizing or scaling approach. It's not all or nothing Hail Mary passes with thousands of shares. I inherit so many traders from these con men are out there saying, trade 5,000 shares of a $2 stock and you too can become financially free. That's a bunch of crap, right? Does that make sense to everybody? You need to be trading instruments with volume, liquidity, volatility, professionally. Whenever I speak for my money show appearances, and by the way, VXX is starting to head up, which means the stock market's probably going down. It's going down. 31.8 is going to be our first long, right? We're not there yet, but headed that way. 31.8 is going to be your first long, 32 and a quarter above the whole number is going to be your secondary. This goes up when the stock market crashes. So if this is going up, that means our S&P is probably headed down a little bit, right? Right before 10 o'clock, the 10 o'clock shuffle. I was watching this good movie with Morgan Freeman called Lucky Slevin and Bruce Willis talking about some shuffle or something. And look one way, zig and zag. When the street zigs, you zag, right? And you got to trade. If you're going to trade against professionals, guys like me are sharks. We've been doing this for nearly 20 years. You got to have an edge that professional traders have. That's why so many people trust me here at Trading Open for the years that I've been here. Thanks to all of you for being here. We got a few minutes left. We're going to continue to be on the lookout to see which of these guys hit and run. Kind of the hard work that it takes to make it as a day trader, potentially, is that you need to set up a rack of orders before the opening bell. Maybe you just pick 3. That's fine. But don't just try and find isolated, it's my favorite chart. I'm just going to bet thousands of shares and hope for the best. That is a failing way to trade. The correct way to trade, at least that, ask any experienced trader, is you got to trade a handful, multiple occurrences. Trade wide, not deep, as I say. So anyway, join me for the next couple of weeks. I slashed the price of the basic version of the room to just $97 a month, and that's month to month. You don't have to buy multiple months to get that rate. If you want downloads, and by the way, I think I'm the only guy in the industry too that offers video downloads of each of the sessions. That's available in the professional membership, and that's double that. That's like $197 or $195 a month. But if you want the basic, where you get into the live webinars every Tuesday, Wednesday, Thursday open with me, that's only 15 hours of training for only $97 a month. And I don't try and BS you guys and blow smoke up your butt saying, oh, you can make thousands of dollars in $3 stocks. But let me know how it works out for you. And if you're like everyone else that comes flooding over to me after being burned by those guys, you'll see the difference. Anyway, let's see what else is running. U.S. Steel looks healthy. 30.4 is starting to take out new highs. It's starting to nibble above that high. And if you have any questions, feel free to ask. I'm not going to stick around too much longer. This is free after all. I'm not a charity. I'm a for-profit institution. Anyway, 30.4 is a breakout minor gap. Starting to nibble out new highs. Needs a break and stops. When in doubt, get out. When in doubt, go to cash. Cash is your friend. Cash is king. As a day trader, it's all about tight stops, so make sure that that's part of your daily routine as a trader. Let's see where these guys are going. This one's actually kind of appealing for a pivot in case it comes back to life. It's alive, AXTA. We don't have any calls on it yet because I didn't like the profile of the gap. And it turns out that was correct because it just gapped and crap it, gapped and gap fade. Very risky. Experienced traders only may want to look at 31.8 and 32.10 as bounce triggers. So I know it's starting to go up there now. May want to look at it for potential up move. It triggers to 7 after I said it. So it may be good if it runs up here off that 80-cent mark. But we're not quite over that yet, or it's right at it, I should say. It's kind of nibbling around it. So you may want to take the shot, but use a 10-cent trailing stop. Next long would be 32.10 in AXTA. Meanwhile, the chart didn't go anywhere, right? Which is why I hate these things. They don't do anything. Even though it did a lot Friday, today it didn't do anything. And by the way, it's another reason to avoid charts because they're treacherous. But often you'll see what I call a big candle day followed by a flat candle day. So often either it's a big gap day, a big day followed by a flat melted candle day, or a big day followed by a flat day like today in this chart. So that's why you do not want to make these kind of charts your focus as a day trader. You want things that actually have some momentum and actually have some directional strength or actually run up a point or two. It's so much easier to make it, trying to trade instruments that'll run 50 cents or $1. Like OSTK ran 2.5 points for us before its fade. That type of pattern makes a lot more sense to look at for trade setups, so that you've got the range of multiple points. Let me see if we have any other hot charts up to bat here. I put Macy's in the list. Let's see if it did anything. It started around 25.4, starting to hit. Maybe use a break-even exit on that guy in case it stalls. Main thing that I'm proud of is you folks. So many traders I've worked with. I'm pleased to get all the testimonials and the kind words and everything, from all the traders. One of the things that I think can help you is to differentiate. Try and cover as many reasonable examples as we can cover here each session for you. We'll wait on that one until if it breaks over 24. But I like to cover as many reasonably strong charts for you as I can so that you have a variety of charts to learn from. And that, more than anything, can accelerate your understanding of pattern recognition skills, is having a nice dozen or 15 or so charts to learn from each session. I put a lot of work into this. We don't just sit here and blindly look at one chart and, like these kids would do. I don't know. Okay, everybody, let's look at this. Going up a nickel. Wow, I'm in and I made fortunes. Yeah, I don't think so. The truth is you got to play a rack of trades, and I hope that I get that across to you. Any of the experienced traders I worked with and know for years, we'll all tell you the same thing: tight stops and play the field. And this is I think it's a good place to learn. I mean, you tell me. I know it's kind of a lot of information to cover, but one thing that I think can really help is start looking for how to not only get your live, and the 2-day highs and gap continuations can also double as swing trading alerts. That's another thing that my swing traders like. I've got a lot of expertise in learning how to use tape reading along with 1-minute candlestick patterns for price action moves and gap and breakout charts. That's what we do for. So the stock trade and stay away from the dangerous charts. Trying to find. The main focus here at Trading Open has always been education. I spent a lot of time developing checklists that are updated weekly with new tips and strategies for my traders, right? So you get, and I put a lot of work and effort into teaching you guys. So it's not for people that don't know what they're talking about, or people that are amateurs, or for people without intelligence. I like to, I focus, a good, intelligent, strategic, step-by-step approach for calls that actually have a shot, it may actually go somewhere, right? This is an inside gap. It did an inside gap. We're kind of late to the party, but we'll still see if there's some momentum left in it. 23.7 on the short, which would actually be more likely to trigger than the long. Hey, sometimes Momo, when it runs, it does have Momo momentum. 24.20 would be the earliest I'd take a shot at this guy for a long. You know, maybe it runs at 25 today. We don't know. You never try and predict price action. You always react to where things are headed. Now, if you remember, I said we often get a 10 o'clock shuffle in the market. You often get a 10 o'clock reversal. So the current trend has been down the last 10 or 12 minutes. It may continue down, but you know, any time now it may come back to life. So I'm going to pay attention to potential 10 o'clock reversals in the markets as well. All right, questions. I'm open to questions. Now, let me do a quick final scan here for you guys, and I hope this gives you insight in terms of at least my philosophy and approach for making calls, the types of charts that we like to cover here for you, the transparency of not making false performance claims and trying to say, oh, we're in thousands of shares and we just made a fortune and you too can make a fortune and become financially free. We don't do that. I'm a teacher and a trainer as well as a trader. But the main thing I want you to get out of all this is learning a difference. It's more focused and intelligent. Speaking of which, 44.8 this is called playing both sides of the mountain. We did the longs on the way up. I got you guys out near the top. The short of 44.8 is now in the money by 50 cents or so. Because we're at a whole number, if you're a new trader, cover it all now. And that's very typical of the type of training and instruction I deliver in Trading the Open is I always get my traders out near whole numbers, right? I called what turned out to be the exact pivot top and this guy on the way up, right? Remember I said we get out at the 0.7, right? And that was the exact top in this guy before its big drop. I said to go short at 44.80, which is here, and it ran down. Because it's getting close to a whole number, the 44, it's a good time to cover the short. Because see this reversal in progress? That's right off a whole number support. So this is a good time to bank profit and cover out the short from 44.8. I got you guys short back up here at the 80. And where I called it at the 20 and 30, that's a good place to cover before it gets back up to what we got in at. So I always anticipate reversals for you here as a member at Trading the Open with whole number support. And you can also use those for pivot plays. Whole number support and resistance for the play. So a very good focused step-by-step approach. And as you can tell, I put a lot of work and training into this. I used to be a corporate trainer for the Ford Motor Company and Chevron and Rockwell International and Boeing Aircraft's McDonnell Douglas division. I used to do a lot of corporate training for quality engineering and process improvement and revenue and all the different strategies that I used to work with executives and middle managers in big companies. I've got a corporate training background. I'm a UCLA graduate and a certified quality engineer and all the rest of it. Where it looks like it's going to pivot. So I've got credentials that Yang other people in the industry do not have. 38.20 and 37.60 were both good short calls. I would cover it all out now. Who can tell me? I want you guys to be the heroes, not just me. I'm an old dog. I'm 53. I'll be 54 in a few weeks. Who can tell me why would now be a smart time to cover the short? I mean, it's still overall headed down. I said to go short here. Did I not? I did. I said to go short here. And although it's still headed down in our favor, I'm not a big fan of the whole let the winners run within reason. I think take the money and run is a better approach. Why would now be a good time to cover the short? And yes, you can all applaud. Those are rock star short calls. He shoots, he scores, the crowd goes wild. Crowd wave. Go, Ken. It's your birthday. Anyway, I said to go short. It's not quite yet my birthday. But anyway, I said to go short there, and cover here. Why on earth would I call it cover? Because it's still going down. Do we want to leave money on the table? Is that the whole idea? No, the idea is to lock in profits at likely inflection points. Right, whole number, right? 37 was a whole number. So I'll often say, at least new traders cover out all right now, and experienced traders cover out half and use a kind of insert tight area to trail cover stop, say 36.80 on the remainder. But I think now's a good time to cover the short. That's a winning day trading call. It's over 1 point win. 38.20, 37.60, all the way down here to 36 and change. That's a good time to short. And in fact, that's a good time to look for a potential bounce if it gets back over 37.2. So I like to walk you guys through professional calls like this that actually make sense and that actually have a pretty good odds of continuing. You're right, whole number support from Steve and Aaron, Virginia and Corey. Thanks, you're right. Hey, BW, I used to work on the C17. You said you used to work on the F15s. I was in Long Beach. We have 51,000 people there. This is back in the late 80s, but I used to work on the C17 and the TQM program, or TQMS program, as it was called back in the day. Of course, I got riffed. I got laid off with thousands of other people. You know, first hired, last hired, first fired. So I got laid off. I don't know, it was a year or two after I'd been there, along with thousands of other people. That's a problem with aerospace and defense A&D contractors, is when the big company loses a military contractor, a defense contract from the U.S. government, that means thousands of layoffs. But whoever wins the contract, then you go down the street and go work for them. So it's kind of a shuffle in the A&D, aerospace and defense industry back in California. Back in the 80s, late 80s and the early 90s, that's how it was. I don't know if it's still like that. But anyway, does everybody see that was a good place to cover the short? Okay, in Alaska. I've never been to Alaska, but it looks like a scenic place, at least on the cruise boats. But I'm in Colorado. It's cold enough here. Colorado is kind of like winter for beginners. I remember when I celebrated my 30th birthday at Ford Motor Company in Dearborn. It was minus 30 with the wind chill in Michigan on my 30th birthday. I'll never forget it. That's cold. The Great Lakes cold is cold. It's bone chilling cold. And personally, that's why people tend to have a kind of they at least everyone in Chicago and Michigan and Detroit and everything, people seem to have a frown all the time. And I'd be frowning too if I was in such freezing cold weather. So Colorado's easier, so, and scenic. Nice down to earth, pretty honest people here. I like Midwest people because the Ford Motor Company, the best company I ever worked for in my life. Great management. They treat their people right. A good company. Anyway, QD starting to head down. I was in electronics division on Rotunda Drive there. The PDP, the Product Development Process Office. Anyway, QD is headed down. We'll see if it continues to drop. 13.4, that's a little far away. We can tighten that up. And I'll often do that too if things are slow but not quite getting to a trigger and it makes sense. We'll look for a short at 13.80. So that's just a momentum play. It may bounce here, but that would be the first place to go short. And 13.40 would still be good later if it hits. So I'll put that back in for you. Anyway, I hope that makes sense in terms of a good approach for intraday trading. The main thing is training on pattern recognition and timing skills. That's the best, and risk management skills. That's the best thing that you folks learn from me. I don't make any big phony income claims and saying making thousands of dollars a day. And most of the guys saying that are lying to you too. They trade multiple accounts and they'll only show you the wins, but they don't show you the losses they take in their other account that they happen to be running in the background. There's a lot of smoke and mirrors in the trading business. So you gotta, if it sounds too good to be true, it probably is. The main thing you want to get at is learning the patterns and learning the timing skills in real time. And of course, having nice big up and down moves for charts that actually work out is an icing on the cake. VXX is starting to come to life. Again, the long trigger on this guy is still not till 31.80. One thing that you'll learn from me too is avoiding false breakouts. Do you see how, 40 minutes ago I said wait till 31.8 and it ran up within a nickel of that but never did get over that. It's kind of like dodging a bullet, right? And I got a lot of practice in avoiding false breakouts. That's another thing you can learn from me as a trader here is, how to set price triggers at places that stay away from troublesome false breakouts. See, new traders might have got in at the 31.6 or even the 31.7 and get stopped out. I like to avoid that, and so I use a little more conservative entry triggers that are at price points that are likely to attract a wave of buyers and keep us out of trouble for things that reverse course. It's a question from Guillermo. Do I get the stocks in the top percent gainers? Yeah, that's exactly where. Let's see, can I recommend a good Forex broker? No, I can't make recommendations like that, but I can tell you that personally, I use interactive brokers for both Forex and E-minis and stocks. Mostly I trade stocks. See, one's asking about Teva. When it runs, it's usually a pretty good pharmaceutical stock. Pull that one up and take a look. Nah, it's an inside range. One thing, a quick tip I will share with you is that despite the success in Square, overall it's a good idea to avoid anything that occurs inside the previous day trading range. That's one thing, or at least to trade lighter share size as a kind of a defensive countermeasure, because often inside range charts don't run very far. It's the out charts that are above the previous day's high, which is why I use a 2-day chart. So I can visually see, this one has a pretty good open range breakout yesterday, which is good, but today it's compressed. It's kind of like a pennant pattern, and it's inside the range, so there's not enough profit potential. But it's still, overall, it's a good chart. If it takes out new highs or lows, maybe later in the week. So thanks, I'll put that one back in my portfolio box. But these kind of charts that are outside, whether it's a result of a gap or a 2-day high breakout or a pivot, make a lot more sense to day trade because the volatility tends to be more sustainable and it tends to run further compared to inside charts. So this is an inside. This is an inside chart. This is an outside chart. This is an outside chart. Okay. Overstock worked out great for us, both longs and shorts. I guess the caveat is if you do trade inside charts, which this one was, make sure that it's got lots of range, like multiple points. See how much more range this one has than Teva, right? Teva only has like a 180-cent range or something, or 1 point range. 80-cent range, right? From 1 point, from 1480 to 1580. That only has a 1 point range. Much riskier to trade than something like OSTK, which has a 7 or 8 point range, or 7 point range. 7 points versus 1 point made it a lot easier for me to make winning long calls on the way up and the winning short on the way down, and trading something that, or making calls for trades that have instruments with only a 1 point or less trading range. The ranges and volatility and volume are your friend as a trader. Things like this make sense to day trade because the range is so big, right? The Friday range market drop. I was talking with a colleague on the phone as the market was dropping and this guy was skyrocketing. If you remember, the S&P did a big nosedive and then it came back to life. I was following VXX on its move up. Anyway, the range is good, right? 32 whole number up to 36. And notice too, please, even on the ETNs and ETFs, often they'll respect whole number support and resistance. That's why it makes so much more sense to trade these instruments as a trader. Does everybody see this? 4 points of trading range is a lot easier to get 50 cents or $1 out of a piece of the action than something that only has, 30 or 40 or 50 cents of range, which is why I'm diametrically opposed to the cheap charts, because they don't give you the odds. They don't give you a trading edge. You want charts like this where there's a defined edge, where you've got lots of points of juice of momentum to work with. That's a more sensible approach to trading. So you can see VXX is starting to lift on our thumbnail chart as well as over here. See right there. Always good to have these thumbnails so out of the corner of your eye you can see what the heck is moving and follow up on it live in real time. And you're always constantly sorting your percent change and see who's likeliest to continue to run for you. 25.40 is now in the money. If anyone took that, that's 27 cents. Sell half now, trail a stop at break even on the rest. Don't screw around and wait for half an hour and then it's back down at 24 or something, or 25 or whatnot. Take the money and run. If you're a new trader, sell it all now. Sell into the buyers. Well, there's still buyers in the house. That's going to be a seller. Don't worry about, getting the exact top or the exact bottom or any of that kind of foolishness. Just try and get a piece in the middle. Get a piece of the action as it starts to run. And stay clear of choppy, cheap charts. and the people who claim to trade them successfully, because it's a lot of smoke and mirrors. That's the truth. My life depended on it. I would not be trading cheap charts. I like things like this that actually have some range and some volatility to them. CSQ, my bounce trigger is 37.20. Never hit. That's the thing with trading bounces, and it took me years to learn that the hard way, is oftentimes traders, myself included back in the day, I'd buy the instant it broke resistance, like a cut pattern resistance, but that's kind of like the dumb money trigger that doesn't work out. What I learned was you have to have, as I published in Stocks and Commodities magazine and my money show appearances, I use a false breakout filter of a price action, kind of a safety buffer, kind of like a force field, if, for those of you like Star Trek and Star Wars or the new Orville series with Seth MacFarlane, which I'm a big fan of. I like to have fun with sci-fi, but the point is you got to have kind of like the Borg, and you got to rotate the shield frequencies for the fellow trekkers out there. Take on the inside to reach our fellow Whovians. For those of you who, like me, also like Doctor Who. But the point is, figure out inside. What you want to do is avoid the obvious breakout. Instead, wait for the one that's likeliest to attract new institutional money flow. And that's what I teach traders here at Trading Open is, you know, we're not always 100%, but we do like to avoid false breakouts and get in on ones that actually hit. So 37.20 is a long call that I made earlier before this little false bounce area. So if you do trade bounces, that's another helpful, good professional tip is make sure that you don't get in, don't jump the gun and, hold your horses and wait for buyers to come in. Make sure that you trade a genuine bounce, not a potential dead cat bounce. And then it scratches you and takes a stop. My long call is up here, which has not yet hit. So that's my story, and I'm standing by it because it works. So don't be too keen to get in on bounce trades. Be more a breakout trader. Buy high, sell higher. And by the way, speaking of rockstar calls, 1820 was my short call in RYB. If anyone took that one, that's only 80 cents in the money on a $10 stock. I did have a couple stops in here along the way. Let's kind of go through these and audit these. I'm extremely honest and very transparent about everything. That's why I've been in business nearly 20 years. I'm not one of these hucksters who's out there claiming you too can become financially free and get consistent Wall Street profits trading $3 stocks, low float crap. That does not work. You have my word on that. Try it and you'll see. Anyway, OSTK worked out. Both up and down. RYB worked out on the short. On the down, that's the only one that triggered. 1930 long never hit. What I call auditing my alerts and see how that would have worked out. 5830 never hit yet. We keep that on the radar. 57.7. We're not quite yet at it. We used initial as a 40-cent stop, but that one's initial, so I'll paint that red. 57.7 did hit. It's against us. So I would still be short, by the way, if it hits that 70-cent mark, but we're going to call that one a stop. It's not technically unless it breaks over 58.10. So on these like $50 stocks, we use initial stop value of 40 cents. But most of the time, I'll say break-even exits within a nickel or a dime, so we like to keep things really tight for you. The only way this works is to be very, transparent and upfront and honest, which is why I've been running the room here for so many years, right? I'm not 100%, but I try damn hard to get close as I can to it. Took me a lot of years, but I've been running the room since, you can check at whois.net, since the year 2000, so a real long time. Like a dinosaur. I feel like a dinosaur, right? But I'm not. I'm only 53, but anyway. Let's keep going through these guys. XNet, let's see. 1730 is a break-even exit on that one. It did run at least 20 cents. Break-evens I'll highlight in gray. Okay, so I'll put a gray highlight on the box if it's a break-even, red if it's a stop, green if it's a win. VXX, trying to climb, not quite there yet. They're not holding anywhere yet. VRX 1750, let's use a break-even exit on that. If it gets back to the 50, we'll just call it a break-even for now, even though it may keep going in our favor. It's in the money by a nickel, but I'll just call it scratch. Be frank and candid about everything. 29, ever broke, we kind of kissed it, knocked on the door, knock, knock, but didn't break 2020. So they count if it breaks over that. I'm still good with that if it breaks over that, so keep that on the radar. Macy's Rockstar winner, I said long at 25.40. It's now right near 26. Now, if you're in this and you're 45 cents in the money, congratulations. Now would be a good time to sell it all. Even though, like I said, I realize it's going up, like that square winning short call was running down and I said cover it at the whole number. I'm saying to sell this all now because we're getting close to a whole number. And it's getting a little late in the day here, 10:20 in the morning. So it's still running up and it looks like it's firing on all cylinders. But the trick about making it as a trader, and I can just tell you from millions of dollars of real money trade experience, is taking the money before the market takes it back. So now is a good time, right now is a good time to sell it all. Again, paper trading use only, but sell it all, Mortimer. If you ever saw the movie Trading Places with Dan Aykroyd and Eddie Murphy, sell it all now. Sell it to the buyers while they're still around. You buy wholesale and sell retail, right? And you do that with these kind of charts that actually make sense. So 25.40 was my long call, 25.90 or 89 my exit, 50 cents in the bank, right? Boom. Flawless victory. He shoots, he scores, the crowd goes wild. Because I think it's likely to stall and drop any minute. Even though it's all green and it's all pretty and it's all running up for us and we're all in the money, don't count the chickens before they hatch. It's like, sweeping big stacks of chips off the poker table. If you double down on trips and the villain thinks he's got top pair, top kicker, you shove all in, he matches and make him cry and take all his chips. That's what you do as a trader. You take the money and run before the Wall Street takes it back. Wall Street guys take it back. So as it runs up, you sell into the buying feeding frenzy before it hits the whole number of resistance. Now, maybe it runs to 29 without us and we get frustrated and pissed off, but more like this is it, stick a fork in it. That's a good exit for a day trader. Does everyone see the wisdom of that approach? It took me nearly 20 years to figure this stuff out, so I hope that it makes sense. But it's good to sell while there's still buyers in the house. Kind of like a Black Friday sale or a Cyber Monday sale in brick and mortar retailers. I would never in my life go to I don't go to brick and mortar stores anyway, but I would never ever go to some place like that where, hey, everything's on sale. Let's dig through bins and find something. Really? I mean, get a life, right? But anyway, the point is, sell while there's still a feeding frenzy right under the whole number. So now's a smart time to sell, like I called back here, on the way up. If it keeps running on up for us, that's great. And you can do even better than I would have done. But personally, I would have sold back at the 85.90 area because that's a good exit place for a whole number exit day trading. It's exciting, right? And that's the kind of approach you want to take as a trader. That's what I try and get you guys in it. I get you in at 25.40. Back down here, it ran all the way up to 26. And now it's going to drop. Use 25.8 as a short trigger. But we are done. We're done, son. Cash it out. Boom. Take it to the bank. And that's how you day trade like a boss. You get out right now. By all means, get out now if you're still long for some reason. Paper trading, right? Because it stalled off the whole number. And don't worry if it runs to 27 without you. We got 50 cents out of it on the way up, right? And that's a baller call. That was good. 25.40 on the long, sell 25.90. That is how you day trade, friends, is these kind of charts that have at least a 1 point range, buy the breakout, sell right near a whole number, and that's how you make it, right? A minor gap continuation, which is my signature play, is I've taught at Day Trading University since 1999. Now Trade Mastery, because I got so many swing traders. I don't want to pigeonhole myself. I've got swingtradinguniversity.com too, but rather than complicate my life, I thought I'd put it all under the Trade Mastery umbrella. It's a shorter domain and easier to remember. But anyway, at Trading the Open, you'll learn these kind of approaches live in the markets as I teach you guys. So I hope that this makes sense and proves itself in terms of the validity, the intelligence, the focus, the accuracy, the attention to detail, the conscientious effort I make to try and teach the world's traders how this stuff works. Use a break-even exit at the 30 on this guy, because if it gets back under 30 or at 30, I'd go to cash, because it's not, usually good trades are right from the start. And if it's slowing and stalling and not running like a gangbuster, I'll just go to cash. So the same story here. US Steel, use a break-even exit at the 30.4. If it gets back to the 40, go to cash, no harm, no foul. I know there's some questions, so I will answer those. I know I'm sticking around longer than usual, but I'm here for you guys, right? Trying to help you with this. 42.20 is along. It's not there yet, but enemy fighter headed our way. We'll see if it takes out new highs. Switch all deflectors. Switch all fighters to front deflector screen, or whatever the line was. From the trench run in Star Wars Episode 4, A New Hope. Axta's headed down. 31.6 is the short call if it hits. 31.8 was the bounce long, and that did run up at least 20 cents. Use a break-even stop on that one. Use 31.8 as a break-even stop. 32.10 looks like it hit, but it's pulling back, so it's in trouble, but not yet at a stop value. So we'll see where it goes. What else about Momo? I like to keep things honest for you guys, and I want you to always, learn from these patterns and learn from not only the entries and exits, but the thought and the detail, attention that I put into explaining this stuff for you guys, so you understand it. Because it's much tougher, than anybody makes it out to be. It's very difficult to make it. Even if you do figure it all out, like I've pretty much figured this stuff all out, there's still no guarantee that you'll consistently make money. There's no guarantee that you'll make big profits. My sticking point, my biggest failure as a trader, I'm very upfront about this, like a Speak Money show, is I never got comfortable trading large size. I never felt comfortable trading like 5,000 or 10,000 shares at once. My pain threshold is maybe a couple thousand shares. I remember I was trading MGM stock overnight, 2,000 shares, and at the time it was priced much lower, and it was like $31,000 worth of money that I had in the underlying that I had in an overnight hold. It gapped up in my favor the next day, which is good, and I sold it for a nice $3,000 profit. But I couldn't sleep a wink all night, and so I realized that was like Clint Eastwood said in one of his great movies, a man's got to know his limitations. I can't do impressions, but I love the quote. A man's got to know his limitations, and my limitation is I can do a few hundred shares and not lose sleep over it, but I do not like trading thousands of shares at once. I don't know if anyone else shares my kind of concern or conservative approach, but that's why I'm still in the education business, is because, if I'm only trading a few hundred shares, it's not going to make me any big fortune. But at least I can share my lessons learned on smaller share size trading of a few hundred shares of what I found works more consistently versus what doesn't. I always build my brand on authenticity and integrity and trying to do this stuff right for you guys. PXS, speaking of which, if anyone took my 5-7 long call, booyah, flawless victory. It's up over a point. Can any chat room in the world match the performance of my calls? I'd be really interested in hearing if you found anybody that comes anywhere within 10 yards of my success rate. Boom, I said to go 7 questions. Over 7, I would have sold, actually I likely would have sold somewhere under 6 and the rest right under 7, so I still wouldn't be in. But if you're still in, congratulations. I would sell this guy all right now, because that's a big monster run. 5-7 in, out 740. How much money could you have made on that 1.5 point win on a $7 stock? Do the math. But I would sell it all now myself. I personally would have sold it at 680-ish or so. But if I just saw it now, I'd be selling all now for sure, because it's run up so far. I got you guys in at 570. Out at 747 or whatever. That'd be a good name for an aircraft, right? A 747. Anyway, now would be a smart time to sell this all, because it's getting near midpoint. And the cheaper stocks are especially sensitive not only to whole numbers, but the 50-cent increments. So for that reason, just a price action exit, I'd get out. I would not be pissed off much if it runs to 9 or 10 without me. I'm fine all day long if I'm in at 5.7 selling 740, right? That's 1.5 points in the money. So good calls. And I hope that, this is not, like just some rare he happened to get lucky today. Look at, my videos on my YouTube channel, live room sessions I've captured in the past. I like to routinely knock it out of the park for you guys with good calls, but more importantly is the explanations and the risk management, the timing and the pattern recognition skills. So I hope I've earned your trust. It wasn't 100% wins, a few scratches and a stop or two along the way, but most of them were winners, and we had really nice big runs, not only in cheap stocks like PXS, but the ones I prefer to trade, like OSTK, with a nice 1 or 2 point run with these kind of patterns as well. So thanks, Virginia, saying, "My young dinosaur, I've tried." From Guillermo, I like to sell at 90-cent marks. Way to go, Houdini. Thanks, Barry. Thanks, Juan. Well done. Thanks. Ives is saying, thanks, Ken. Very informative. We'll use your trial offer for sure. Guillermo saying maximum 1,000. Yeah, me too. I don't like trading thousands of shares because you're on risk. Let's say you'd gone, it's PXS, say my trigger 570, but then it immediately dropped or something. If you've been trading, like 2,000 or 3,000 shares, like 3,000 shares, even a dime, which is kind of noise. Even a dime would be $300. You're down right out of the gate before you know it hits you. So I like to trade smaller shares, but with a combination of instruments like this one. Usually, though, I don't cover one that's cheap, but on rare occasion, and I picked it right? I exactly picked the right cheap stock, the right inflection point for trigger, and the right exit. What else do you need, right? So I hope that helps make sense for y'all and that you'll consider joining me. It'd certainly be great to see the community grow. It looks like we're still at 661 on the registered numbers for the sessions. I hope this helps you guys make it as traders, right? The authenticity and the integrity and the step-by-step explanations, not to mention the accuracy of the calls, which to me is just icing on the cake. The main thing you want to learn from, and I agree with another guy who says you shouldn't pay attention to anyone's alerts, pay attention to the learning and the education. I completely agree with that. You need to learn the thought process behind the alerts. And as a former corporate trainer, that's what I excel at, is doing very interactive, very hands-on, very detailed explanations. And I put a lot of work and effort into teaching the world's traders the thought process behind the alerts in a very intelligent, rules-based, specific step-by-step methodology that produces at least really good paper trading wins. And you want to get there before you risk live capital is get good on paper like this with the right instruments and the right timing skills and the right price points and the chart patterns explained for you in live markets. So I hope this helps. You guys have been amazing. Thank you for your enthusiasm and thank you for showing up. I certainly appreciate it. Look forward to working with you. Give me a shot. It's only $7 for 2 weeks, and I'll even give you your money back if you don't like it. I think I might have 1 or 2 people out of all the ones who tried it over the years even asked for that. There's so many new members on board, and look forward to seeing you guys work with me. You have my word. I'm very conscientious and very honest and very authentic and very advanced step-by-step professional training. I'm not some like these young guys who are out there. Oh, I'm already long thousands of shares and I'm selling right now, honest. I just made $6,000 and I turned a $20 account into a $200,000 account overnight. I'm not one of those bullshit con artists, young guys like you see out there. I am the real deal, and I hope that I can help become part of your success and answering your questions with authenticity and integrity and detailed explanations in a safe learning environment. Look at it like a sandbox or beta test. You're here to learn from as many different winning patterns as you can. The difference between what you're looking at and where you're entering and exiting and what I can teach you is likely, light years of big difference in terms of skills. Or even if you're an experienced trader like me, you've been trading 15, 20 years, I can give you a good sharpening of the skill set and some good advanced insights in terms of advanced professional trading skills and patterns and the rest of it. So that's a good, honest, heartfelt, communication from me to you guys. And I hope that, today's been worthwhile and that you've learned. Even if you don't continue with me, I still wish you the best in your trades, right? On behalf of all of my colleagues in the education industry and the brokers and the expos and the publications, we all want you guys to do well as traders, because that way we can all work together. But we do not make phony performance claims or say that you're going to become financial free and consistent profits and all that kind of crap. Anyone who tells you that, you should not trust, right? I'm just curious too. Let me wrap up by asking who has been in the trading industry that runs chat rooms, and I'm not going to read off the answers out loud just for you know, just to be polite. But who've been the chat room operators that have been the absolute worst? The guys that I'm just curious because I want to make sure that I continue to not do what they do. I've run this room for nearly 20 years doing it the right way. But anybody, you might want to avoid people who, are con men that have BS claims of huge real money profits, cover low float, low volume, cheap stocks. They have impossible fills that only they seem to get, but after the fact they make the fact, oh, I was a fortune. Honest, believe me. Ha ha ha. Not. Caveat emptor. Nobody else can duplicate their calls because they're all bull honky, right? Very slick uncommon with very elaborate schemes to play a long con and make all these big. And the bad thing is traders don't know the difference. They come across these places that look like people are making fortunes hand over fist when they're not. The only person making a fortune is people selling overpriced courses and all and special indicators and all that kind of crap. Minimal education, constant upsells. They use SIM accounts that they pass off as. Fortunately, the CFTC has been cracking down on that a lot, but unfortunately, their hands are full and they can't. By the time these operators get shut down, the damage has been done. A lot of people blow up their trading accounts and waste money on stuff that doesn't work. And like the poker tell or micro expression, if you've ever, I got a lot of buddies in law enforcement and military, the micro expressions, if you were to check somebody's, where their eyes gaze or if they're cross-eyed or where they blink or you can tell if they're not authentic. The poker tell in price and validation in day trading is check time and sales. And if they say I'm long 3,000 shares of some low float, low volume, crappy stock, you don't see that transaction go off in times and sales, they're bullshitting you, right? So make sure you use time and sales to verify if they are claiming they're making thousands of shares and they're making thousands of dollars each morning. It's a bunch of bull honky. That's the truth. Or trying to upsell into proprietary BS indicators. So if you've ever been hustled by a company like that and taken a big, the reason I ask is because I'm kind of like a person that's well respected, that I inherit a lot of these people, the traders who get burned by these young operators, and then they come to me for authentic training, right? So avoid like hot potato scalping for teeny tiny moves on thousands of shares. Stocks that get circuit breaker halted or wide spreads, you should not be in a room that has risk, a ton of risk, where they're the constellation of the worst, which is cheap instruments, low volume, thousands of shares, circuit breaker halts. Have you ever been burned by a live room? I'm not that, of course. I tell you guys up front, we do not do live real money trading here, and we're all about the education. And I think that's the right way to be of service to the industry, as I have since 1999. But all that kind of crap out there you want to avoid. You want to get good stocks that have volume and volatility with good sense. Tuesday's big movers have at least a 1-point daily range with high volatility and volume, with clean, wide open range breakouts and gaps. And if you do trade cheap charts, they should be ones that go a little something like this, right? That have multiple points, but they're rare. These are kind of like unicorns. They're hard to find this kind of chart. But I still said to go long in this guy at 570, right? That was the call ahead of time for you guys in this one. So the dramatic and big wins, yeah, sure, the guy ran up 2 points, but those are tougher to find. I like to trade instruments like this where you can get, say, 50 or 80 cents or a dollar. These are more typical of the type of charts I cover here, where you can get 50, 80 cents, a dollar patterns that you can learn from that have good momentum. So. Question from Guillermo, what's a circuit breaker halt? Oftentimes, it's another reason to be wary of the cheap stocks is if the volatility exceeds a certain percentage threshold in a certain time frame, like a $3 stock that runs 50 cents in 1 minute or something, they get halted by the exchanges kind of to avoid flash crashes or that kind of thing. So it's called circuit breaker halts. And what you'll see with a lot of the cheap charts is often, when we look at the leaderboard scan, if I can find any for you guys, they get halted, and often they'll gap against you, which is one other reason not to trade those kind of crappy charts. Usually not so much in the New York exchange. If you look at the Amex especially, or the NASDAQ, I don't know any examples off the top of my head because I don't trade these instruments, but oftentimes, some cheap crappy stock, this one hasn't been halted, but often it'll get halted and then it reopens either up or down, and it's very risky. So you don't want to trade cheap, low volume stocks. Do trade cheap stocks. There's safety in numbers, so make sure that you trade. I don't see any circuit breaker halted ones here so far, but you can see how crappy the chart patterns are, right? For the most part, even the percent gainers under $10 in the New York exchange, they're all pretty much crappy charts, right? So why would you trade those, right? So that makes sense. You don't want to trade charts like that. You do trade cheap charts, they should go, I don't know, a little something like that. Just saying. Those are the kind of charts that make a little more sense. I said to get long at 570. Any questions? Now, I had you guys get out earlier, but it still ran up. I would have missed this latest run up. But that's okay. Better safe than sorry. I'd much rather be in at 550, out at 7, or in at 550, out at 8, than trying to risk having to run on. Hey, it looks good. So those are the kind of charts I'd like to cover here for you guys at Trading Open, and hope that things make sense. It's not easy, though. I'm the last guy in the world to tell you this is easy. It's tough as heck, but well, thanks, Trader saying I like that you're honest. And a great deal. Yeah, thanks. I appreciate it. Well, thanks. Trader saying thanks again. Good intro day today. Hope you get many new members from one of my longtime members. I appreciate that. Question from Don. How do I handle a wide spread on OSTK? Well, I don't know, Don. It's got a 3-cent spread, so that's not too big, right? Or 1-cent spread. I'm just looking at time and sales. What wide spread? 3 cents is about maximum, right? So that's not a bad spread at all. Maybe up to 4 cents. Maybe up to a nickel. So I got a nickel spread. Well, the thing is, I got you guys in on this one at 44.60, and we're out near 46. So out of a point, I don't mind taking a nickel or dime on a spread. But yeah, I do prefer instruments with nice tight penny spreads that have good ranges. Anyway, this is quite the momentum runner, right? Good play. But you don't have to ask me that every single time, but thanks anyway, Don. Oh, thanks. Trace is saying thanks for offering another great learning experience. Sure thing. All right, well, I think we're going to wrap up. James is asking, do I use options or buy shares directly? The training that I teach here is just classic day trading where you're trading the shares of stock, not options trading. I mean, I suppose you could test out the patterns. The main thing is learning the right patterns, but I trade that online. So, live trading only, so we're not doing live real money trades. We're doing much safer paper trading or demo account trading, so we can learn the patterns together, and I can answer questions. You don't have and also you can trade more instruments, right? Because you may not have capital to trade 6, 7 instruments, 500 shares each with a live account, but you can certainly do that with $1 million whatever paper trading or demo account. So the main benefit here is to learn the patterns and the timing skills and the pattern recognition skills, very intelligently explained, very accurately for the most part explained, with very good entry and exit calls. So yeah, I wanted to thank all of you for being here. I still got a big turnout here today. Normally we run the room Tuesday, Wednesday, Thursdays, 9:15 till 10:30. Things get slow around 10 o'clock, so most of the calls hit between 9:35 and 10, and that's kind of the golden 90 minutes of the market. If I was watching Pirates of the Caribbean, Dead Men Tell No Tales for the first time last night. I like the movie. I like the little capuchin monkey. I like the monkey. I like the monkey. I'm an animals guy, but I like animals. But the point is, if you're trying to raid the treasure chest or get the buried treasure as a pirate or as a trader dig winning trades out of the market, you got to know where X marks the spot on the pirate map. And Otherwise, you spend years searching in vain. And so as traders, I like to focus. Most of the best time to day trade is going to be 9:30 to 10 o'clock Tuesday, Wednesday, Thursdays. That's the 90 minutes of each trading week within which the best opportunities reside for the most part. And certainly there's going to be exceptional Mondays or Fridays like we had today. Was a good Monday, right? We had good calls all day long or all session long in Monday markets for you guys. But these are the kind of patterns that you want to learn as a trader if you're going to make it as a day trader, is the timing and the patterns that make sense to work with. The question from Michael, do I do a class on order entry? I've got a lot of downloadable courses, but the neat thing about live room is you get all the entry triggers set up for you before the opening bell. So that's another good reason to be a member, is I explain the entries and the reasons why. And then, of course, for any of my members, you can always ask, Ken, why did you say to go long at 570 in PXS? Why was the long call set there? And the answer is it's 20 cents above half point on a momentum play with something that a big previous day's point run from 2 to 9. So that's 7-point run. So 570 made sense for a long call today because of, as a function of the previous day's range, number one, and because of the volatility of the current day with good volume to work with. I said to go long and pointing. That's a good call. Anyway, my friends, thank you for being here. I hope that this gives you a good honest look at stuff that actually works for the most part. You have to speak on the stuff that makes sense. Make sure you do have at least a couple of monitors. Now, you can get by with one if you don't mind flipping back and forth through stuff, but monitors are so cheap. Like, I like ViewSonic. I used to just get Sony's, but now I've got ViewSonic. So and Samsung makes great monitors too. LGs are okay too, but I use ViewSonic. But anyway, 24-inch monitors are great. 2-week trial at tradingtheopen.com/try. Try it out. Money back guarantee. And if you stay around, it's only $97 a month, which is not much at all. I used to charge and get $4.95 a month for the complete membership. But for the basic membership, where it's access to the live sessions, it's only $97 a month. So you can try it out for a couple weeks using PayPal, right? So it's safe and secure, and see why so many folks have been with me. So I wanted to thank all of you for your time and your attention, mostly for your attention and your time, because time is limited, and that's our most. No matter how much money I have, I can't buy more time. I just eat healthy. But anyway, I hope that this helps, and I hope that it can be part of at least getting you a very good education in professional stock day trading the right, honest way with good charts and good volatility without trying to blow smoke up your butt saying, you too can make thousands of dollars every day trading $3 stocks for thousands of shares or 10-cent moves. I've never heard anything so ridiculous, and any experienced trader knows that that's a bunch of BS, but unfortunately, there's some very elaborate smoke and mirrors games from some BS chat room operators out there trying to mislead the public. So fight the power, fight the phony promises. Instead, that's kind of like anybody sees a classic movie, Total Recall with Schwarzenegger, under that divorce, right? Classic line. Other guys are kind of like Recall, where you screw up your brain. I like that on the subway scene where Arnold was watching, and I don't know if you remember, there's an advertisement, and the guy was saying, forget that phony baloney stuff, do things old-fashioned, get on board the real rocket ship and actually travel to the planet you're trying to get to. That's kind of me. I'm the voice of the old school. So I realize it's not as, maybe sexy as saying trade 5,000 shares with $3 stock and make thousands of dollars a day, and you too can become financially free and get consistent profit. But that's a bunch of hogwash. I like to play an honest game here, which is why I've been around for so long. So anyway, love to see you as a member. And I don't bash on the other rooms for members. I just do that in these events so you guys can tell the difference between, you could smell the difference between authentic experts and people who are hustlers, hopefully, right? I like to be on the right side of doing it the honest way, the old-fashioned, roll up your sleeves and do the work. Like Sidhu said, I think it was, I forgot, it was either Vince, the coach, or maybe it was Jim Rohn, I don't know. Somebody said the only place success comes for work is the dictionary. And so I represent, yes, you got to think about it, work hard at it approach, but that's, in my full opinion, the way to go after trading is learn volatile patterns, is a great place to learn, right? So you can figure out the difference between charts that actually run and intra-exit timing skills like I illustrated here for you today. So anyway, I'd love to see you as a member. Go ahead and join now at tradingthehopecom.com/try. And you can cancel if you want before your 2 weeks is up, so it won't renew at PayPal if you want. But if you like all my, well, not all, but a lot of my other traders, you could stick around. It's only $97 a month for 15 hours of live market instruction, which is a total bargain. I used to charge over $1,000 for 2-day live day trading seminars for years in Las Vegas and New York, and or I should say Las Vegas and Denver and California. So you're getting 15 hours of training. That's like getting a 2-day seminar for only $97 a month, which is a total bargain because I'm the industry's top or one of the top experts in intraday stock trading. So I'm president of the original Day Trading University and TradeMastery.com. Ken Calhoun, wishing you all the best. Any other last questions? If not, we're going to call it a wrap. No, thanks, Tom, for asking. Yeah, like I said earlier too, if there are instruments that have spreads that are larger than you're comfortable with, just focus on the many that I cover here that only have 1 cent spread. So that's kind of like the standing answer. But yeah, most of the ones that I cover have tight stops. Well, thanks, Guillermo, and thanks, Mike. Appreciate it, man. My email address is either ken@daytradinguniversity.com or ken@trademastery.com. But the better way to get a hold of me is do not use email, but use the Zendesk support tab. So on any of my websites, in the lower left, there'll be a support tab, and that'll submit your question. If you've got a good, honest question, feel free to ask through the support tab. And that's a good way to make sure that you get the answer, because sometimes the ISP emails block individual emails, but Zendesk usually gets through. So anyway, thanks so much to all of you for being here. It's a real pleasure and a real honor having a big enthusiastic turnout, and I wanted to wish you the best for success in your trades. Give me a shot. It's only a couple of weeks. What do you got to lose? Nothing, right? I take all the risk. Money back guarantee. If you think the $7 is not well spent, I'll more than cheerfully refund it. If you want to stick around, it stays around at only $97 a month. And you know, it's worth it because it's all the hours of training that I give you. So, and the personal answers in live markets is another good benefit. So, hey, you're welcome, folks. Take care, and I'll see you in the live room. Bye-bye.